When it comes to running our small businesses, most people like to have hard and fast rules that they can point to and say, yes, my business is doing that, check. Some kind of metric that they can measure their business against. And a lot of times as a financial professional, I have to say, well, it depends, but not today. I have a hard and fast ratio that I want to tell you guys about. And this is one of the number one metrics that I would say any business needs to track in order to be profitable. So if that sounds good, I'm going to get into it in just a second. If you aren't already subscribed to the channel, I'd love to have you here as a subscriber to the Clara CFO Group channel. I am a fractional CFO. I do fractional CFO work for small businesses. I see what's happening every day in small businesses, and the stuff that we bring to you on this channel is coming directly from those conversations we're having with real life clients. So this metric that we're talking about today is absolutely something that we talk to our clients about all day, every day. Okay, so if you'd like to glean some of that information that we're talking to our clients about, that's what this channel is for. Okay, so we'd love to have you here as a subscriber. Thanks. So this ratio that we're talking about is a labor productivity measurement called the labor efficiency ratio. And if you have ever heard me talk about it before, it's because it is coming from this book, Greg Crabtree, Simple Numbers, Straight Talk, Big Profits. We're big fans of Greg Crabtree over here. I have interviewed him here on the channel, and I also just had him on the Financial Clarity podcast. We'll link both of those in the description box below so that you can go and watch those if you want to learn more about these types of topics. Also grab the book if you don't already have it. It is a fantastic read if you're trying to run your business in a more financially profitable way. Which, who isn't? Okay, so labor efficiency, I'm gonna tell you what it is. I'm going to use labor efficiency and labor productivity pretty interchangeably. So labor productivity is this idea that every dollar of labor should be producing something for your business. So should be actually coming into your business for some type of return with revenue, okay? Now, the labor efficiency ratio is the metric that is going to measure your labor productivity, okay? So when we say labor productivity and labor efficiency, we really kind of mean the same thing. It's all about that concept of like when you hire somebody and you're spending money to have them work in your business, you want that to be moving forward your business in some kind of way. So even an admin assistant that may not be necessarily directly relating with clients or be a revenue generating professional if you're in a services business, if they're not revenue generating, they still should be producing efficiency by maybe taking off some of the workload of somebody who, is a client serving professional, for example. So anybody that you have in your business should be moving your business forward in some way, whether directly or indirectly. That's the concept here, okay? And so the labor efficiency ratio is how we calculate that is we say every dollar of gross profit over every dollar of labor, okay? So we take gross profit as the numerator and then all labor costs as the denominator, and that will give us labor efficiency ratio. Now, before you freak out about like ratios and numerators and denominators, I'm going to show you how this works out, and we can also put it up here on the screen somewhere. But gross profit on top, labor costs on the bottom equals labor efficiency ratio. It's really not too hard, but the hard part is sometimes knowing how it works directly in your business with your financials. And so I want to talk about a couple nuances, and the target number, I will talk about nuances, and I'm going to pull up some actual real P&Ls that I've doctored a little bit so that you can't tell who they're from, but I'm going to pull those up and actually show you how to calculate this directly in a profit and loss statement. But before that, I want to make sure that I tell you what is the goal. I started out this video saying there's hard and fast rules. The hard and fast rule is that usually in most industries, I'd say 99% of industries, if you have a labor efficiency ratio of 2, that means for every dollar of labor, you are producing $2 of gross profit. If you can achieve that, and that, assumes that you're doing your accounting correctly, if you can achieve that, you will most likely be profitable at 10% or more of profit percentage. Okay, now, there can be lots of different reasons why maybe you're not calculating that number and you're still, or maybe you think you have a 2 or above, but then when you actually go and you look and you say, hey, I'm still not profitable, but my labor efficiency ratio is 2.5. If that's the case, I'm going to talk about some of those nuances that might be throwing off your labor efficiency ratio. Okay. So a couple things I want to mention first on those nuances that could be throwing off the ratio. One, you might not be including your owner's compensation in your labor cost. So for all of you guys who are operating as an LLC or even a sole proprietor, you are just taking draws from the business, and that means that your wages are not showing up on your profit and loss statement. Those are actually a balance sheet transaction. So your profit is going to be falsely quite high because you're actually distributing to yourself wages from your profit. So it's not showing up on your profit line, okay? So what you need to do when you're calculating your labor efficiency ratio is you need to take all your wages that are on your profit and loss statement and then add in what is a reasonable compensation for you, which, could look like what are those draws that you're taking to sort of pay yourself for your services. So you do need to kind of create a different calculation for yourself in that way. Now, another thing that could be falsely throwing off your LER calculation is that you might not be including the right things in your cost of goods sold. So to get gross profit, you need revenue minus cost of goods sold equals gross profit. Revenue is pretty straightforward. That's all the money coming in. But cost of goods sold, a lot of you guys will be including things that shouldn't be in cost of goods sold, or maybe you're not including enough in your cost of goods sold. So maybe your gross profit looks really high and you're thinking, hey, yeah, I'm looking really good. My labor efficiency ratio is great. But actually you have a lot of direct costs that should be considered cost of goods sold that you're not actually including in there. Okay. So these are some things that can throw things off. I want to hop into an Excel spreadsheet. I've got two examples to show you. One of a business that is quite profitable and doing well and has a good LER, and then one that also includes contractor costs, because that's the other nuance I forgot to mention to you guys, is contractor costs. Sometimes we have employees and then we have contractors that we're kind of using as staff augmentation, or we can use those people to actually service clients in some ways. And then some people use a full contractor model where that's all of their labor really is contract labor. If that's the case, you need to include contractor wages into your LER calculation for the total labor costs as well. So I'll show you an example of that because I have a good example for you. Okay, so without further ado, let's go ahead and get into the Excel spreadsheet real quick, and I'll show you how to calculate labor efficiency ratio in two different ways. Okay, I have two examples here for labor efficiency ratio, and I've chosen these two examples because they are both service-based businesses that are actually B2B companies, but really it's more that they're service-based. Most of the people who watch this channel are service-based businesses, and that's one of the reasons why I wanted to talk about labor efficiency ratio with you guys today, because this is one of the big things that we're seeing over and over again as we talk to our CFO clients. So just real quick, run through the P&L. Top line is 2.7 million. Gross profit is basically 2.6 million. They have a little bit of cost of goods sold. It's really not much. It's really just merchant service fees and a little bit of direct travel, not a lot of direct cost of goods sold here. So gross profit is 2.6 million. And then we have wages here, and they don't really have any other contractors that they use. Everybody that they use is an employee. And so they're all calculated here in the salaries and wages line. And then what we have not included is we did not include payroll taxes or benefits here. This is just wages, okay? And then when you look at this business, I've collapsed it so you don't see all the detail here. But when you look at this business, the net income was $575,000, which calculated out when we take 575 divided by the 2.7 up here is 21% profit. That is an incredible profit margin. Now, I know this business that the business owner is paying themselves a reasonable salary. They're not taking exorbitant draws out of profits. So we're not going to modify labor costs anymore because we don't have contractors. Cost of goods sold looks good. And the owner is paying themselves a reasonable salary. So I think it's fine that we don't modify labor costs at all for this LER calculation. So what we're going to do is we're going to take this gross profit and then divide it by this salaries and wages number. Very simply, this number divided by this number is 1.94. Now, this is really interesting because right here, even though our target is 2, this is basically saying that this business is doing great at even less than a 2 labor efficiency ratio. Okay, so if let's just say this income was a little bit higher for the same amount of wages, then we'd be at the 2. But, they're already making a 21% profit margin. That just means that they're not spending a lot on their other operating costs. They are able to operate pretty well. So overall, this business is operating very efficiently. Even though we're not even at that 2, we're still at a good profit margin. We talk about this with the business owner that we're trying to get to 2 or above, but in this case, this still looks quite healthy. So let's move along to this design company. And this is a design company that does leverage subcontractors for a lot of their client work. So they have a lot of different contractors that they can hire out for different projects. And let's look at this. So in this situation, total income is $812,000. And then they've included their subcontractors up here in cost of goods sold, so making the gross profit lower. Greg Crabtree actually recommends not including direct labor up in cost of goods sold, but rather put it down in operating expenses so that you can have more apples to apples comparisons between different companies and compare the gross profits. In this case, we just do a little bit of extra calculation to figure out what that would be otherwise, and I'm going to walk through that in just a second. So gross profit is 447. You can see we have wages here of 177, and then when you get down to the bottom line, this business actually was just barely break even at a 1% profit for the year and only made $4,000, So this is obviously a business we want to help and try to improve that profit margin. So what we've identified is that they probably have too much labor costs for the amount of revenue that they're bringing in. So how we calculate this, because they have so much in subcontractor costs and then they have wages as well, is that we actually add the 2 together. So I've done this calculation over here. The labor costs will be the employee costs, which is pulled from here on the P&L. And then we have the contractor costs, which is pulled from here on the P&L to get our total labor costs here of 514. And then our gross profit, we can't take it out here and use this number as our calculation because that's going to give us really weird math and that's not going to work. We're not going to take 514 and divide that into 447. So we need to add back the subcontractor costs that we're using into labor costs. We're putting into labor costs. So we take this number, the 447, and then we add back the labor costs to say, and I'll show you the math here. If we did not have subcontractors up in cost of goods sold, it would be 785 here. So we're just going to undo that. And so you can see why I did that there. Okay, so gross profit, we're adding back in those contractors. So our gross profit would have been 785 if we didn't have direct labor up there. So now we can take our gross profit number that we recalculated, divide it by the labor costs, and then you'll see here our labor efficiency ratio, when we take 785 divided by 415, or 514, is 1.53. That is not getting us to where we would like to be. So this is an indicator. All these numbers are indicators to say, well, we've got a couple problems. We've got maybe multiple problems. Maybe our labor is not being efficient enough. Maybe we're not charging enough for the work that we're doing. Maybe it's a little bit of both. More than likely, almost always, it's a little bit of both. We're not being as efficient as we need to, or we are not charging enough, or both. Okay, so this might mean in this case that this business owner needs to really look at their labor costs, see if they've got any overhead labor that they can cut down. Is the owner compensation reasonable? In this case, I know that owner's compensation is reasonable, and mostly this means that their subcontractors are getting paid way too much for the amount of revenue that they're bringing in. So that's where they're looking at adjusting that ratio there. This is why these numbers matter, is so that they can help you identify problems in your business, and then you can go and take action and change them. Labor efficiency, I hope that is really helpful to you. I hope I've explained it well. If you have any questions, please put them in the comment section below. And you can also read up on labor productivity here in this book, and go and watch the interviews with Greg Crabtree as well. I will make sure to link them here so you can check those out. All right. Thank you so much for being here. Talk to you later.